Hi, everyone. I hope we are live in all our social handles. And yes, as we can see, hope you're able to see your screen. And I think I am audible. If not, please put it in the comments. Okay, well, so now all set, we're all ready to go. My name is Suravi, a very proud member of Emirates Chartered Accountants Group. And on behalf of the entire team, I would like to welcome you to our ECAG live talks, comparison between VAT and corporate tax in the UAE free zones. Well, happiness is a day, isn't it? And it's called Friday. Welcome to our ECAG live talks on Friday. Well, Live Talks is a platform to connect with our audience in a larger sphere, to impart knowledge and give an expert's opinion, and of course, to support the business community in the best possible way. Well, today's speaker and expert on the subject is Sia Ajil Verghese, and he is a chartered accountant, a member of the Institution of Chartered Accountants of India, and a VAT GCC diploma holder who possesses over a decade of experience in the field of auditing, taxation, and accountancy. He is the manager of our VAT division, a tax strategy specialist, identifying tax loopholes and developing solutions, monitoring and updating with the developments in the tax legislation. Without any further ado, please help me welcome the tax specialist for today's live talk. Over to you, Ajil.
Thank you very much, Survey, for the introduction, and welcome all of you for our another episode of ECAG Live Talks. And as already mentioned by Survey, today we are here to compare some of the key aspects or the differences between VAT and corporate tax, specifically for free zones. So we are more focused about free zones, how, what are the differences or how they are similar in some aspects, etc. So without much introduction, let's move ahead and let's discuss about these points. And now every one of us are aware about corporate tax is being implemented from next year onwards. It would be starting from the June, and from the financial year subsequent to that, it will become effective for all the taxpayers. We say, like for the companies, it will become effective. So the major difference when people ask regarding to the corporate tax and the VAT, we would like to say that VAT is, as we know, it's a transaction based tax, which is an indirect tax category, which is applied directly on the income or the revenue of each transaction. Like the sales or service, basically we can say that whenever you're raising an invoice, it was applied. So when we are entering into a corporate tax regime, here the first change it comes, it is applied on the business profit, which we say taxable profit, computed according to the IFRS regulations in the books of accounts. So on that profit, the corporate tax will be calculated. And the most important thing is that the book profit has to be arrived according to the IFRS rules or other internationally accepted accounting standards. And now when we are specifically talking regarding to the free zones, it becomes a little more important because the tax rate is very special for the free zones. Like in VAT, we have some special rules when we talk about the VAT for free zones. Like most of the transactions can be treated as an out-of-scope transaction if it is goods, basically a transaction between overseas or between a designated zone to another, etc. But there are 5% VAT applicable on the services also for VAT. Here, when we talk about the corporate tax for the free zones, it would have more general rule than VAT VAT, we have to always see about which free zone it is and how it is transaction happening, etc. But now we have to look into a little more broader, I would say. Here, the concept of free zone will be more relevant. And if the free zone is following the rules and guidelines of the respective free zone authority and is not making transactions or not conducting the business in the mainland, in UAE, then they would get the benefit of 0% of corporate tax. That's one key difference, which with regard to VAT and corporate tax, we can say. And this is one benefit of the free zone entities with regard to corporate tax compared with the other mainland entities. Definitely, there are regulations, there are conditions to be satisfied, etc., to benefit the 0% corporate tax rate. And one additional requirement for the free zone companies who might be following these, who are following or adapting the 0% corporate tax rate would be they have to maintain the books of accounts which are audited as well. So that would be one area where unaudited financial statements might be required if you are not following till now. And to compare with another key term is AED 375,000, which we consider as the registration threshold related to VAT. Same figure is important in corporate tax line as well, but here it is applicable for the income tax or the corporate tax slab. So when we say about the corporate tax slab, the business profits up to 375,000 is not only the free zones, for the mainland entities also, up to 375,000 will be eligible for 0%, and above 375,000 will be taxed at 9% for the mainland entities. But as I already mentioned, if the free zone entities are satisfying with the rules of free zones and the additional regulations given according to the corporate tax law, they can benefit a full 0% even above 375,000. But I'm bringing this concept to compare with the bad laws. And as I already mentioned, here when we think about corporate tax in UAE, here the concept of free zone is more relevant than when we say about VAT. We have to compare about the terminology of designated zone, which is more important. So for the VAT transactions, we look about whether designated zone, whether it's a designated zone or the transactions are between designated zone, etc. So, but when we say about the free zones or for the corporate tax, free zone is the major condition. So all the companies are located, if located inside a free zone, then they will have the rule, or they can get the benefit of 0%, provided they are not conducting business in the mainland, etc. Or there are special rules, like if a free zone entity are conducting business to the mainland is through the through its branch in the mainland, then only the branch income will be subject to the corporate tax, and other would be subject to corporate tax, but will be getting the benefit of 0%, which is really attractive on the corporate tax law. Here, regarding the corporate in the corporate tax, the concept of designated zone is also referred with regard to goods traded in the, from a free zone. So if the goods are traded from the free zone to UAE mainland, and if it is imported into the UAE mainland according to the VAT provisions and under the concept of designated zone to UAE mainland import, in that case also that transaction will become eligible for 0% corporate tax rate, which is the only area where a designated zone concept gets linked into the corporate tax provisions. And definitely at this point, when we are discussing about some of the key points or comparing, definitely we have to wait for the law and the detailed rules and regulations to see about more clarity about it. But on an outer line, we can discuss in this manner. And so other free zones, so other than designated zone, so if any other free zone is making transaction with the mainland, directly dealing in mainland, all those would be subject to corporate tax, probably at the 9% rate. and may not be getting the benefit of 0%. So these would be the area where a free zone entities has to look into their transactions to decide upon how they are getting the benefits of corporate tax, or how they are getting the benefits of being inside a free zone, or maybe they may have to restructure the transactions sometimes, or may they have to look into how they have to select maybe the suppliers and customers in order to make a tax benefit in the transactions, basically from their book profit. And connecting to another important point is about tax grouping concepts, because in VAT it was more easier to form VAT groups, because if there is a major shareholding or control, it was very easy to form a VAT group in UAE, and many of the entities have formed that VAT group also. But when we come to the corporate tax rules, 95% shareholding or the control is required in order to form corporate tax group. And again, if the entity is benefiting with the 0% rate, then they may not be choosing this option. So that would be another practical area how we may have to look into to decide whether it will form into a corporate tax group or not. But at the same time, there are certain related roles for the entities in mainland who might be dealing with a connected with a related company in some free zone. So if it's a mainland entity dealing with a related free zone entity, we would say like a group entity, then such expenses are not allowed as a deductible expense for the mainland entity according to the corporate tax rules. So this would be another area. Definitely the entities has to look into how the transactions are conducted between the related companies. And as I already mentioned, maybe we may have to wait for some more rules related to that to decide whether there are impact of the in the book profit, whether it would become allowable expenses or disallowed expenses, etc. And another one major comparison between VAT and corporate tax is related to expenses, because in VAT we know that there are expenses like entertainment expenses, which for the VAT purposes get disallowed, or certain conditions to satisfied in order to take input claim and recover the VAT. But the same concept, when we look in the corporate tax, they are connecting with the entertainment or the personal nature expenses. But for corporate tax, it is under the category about whether they are allowable expenses or whether it would be a disallowed expenses for the computation of corporate tax, computation of taxable income. So according to the provisions, or according to the guideline released as of now, we could understand that only 50% of such expenses will be eligible. So if there are personal or entertainment type of expenses incurred in the company, maybe for the purpose of marketing, or maybe related to directors or shareholders, etc. And if these are very high in number in the volume of these expenses, only 50% of that would be allowed as deductible expenses according to the provision. So this is another difference which entities would have when we compare with the VAT provision and the different treatment adopted. And another connected to that will be, as we know, definitely VAT returns we have to submit at the end of each tax period. And for most of the entities which are quarterly, some definitely are there who are filing it on monthly basis as well. But when we consider corporate tax, it's annually. It's to be one return submitted for each financial year, and payable also like that once in a year. And here, when there are losses in one entities, so for the VAT, what will happen if there is a refund is basically either you can claim your refund or you can carry forward like that. Here for corporate tax, you cannot claim back the losses, but you can carry forward for the next financial year. And in the next corporate tax return, you will be able to adjust that. And if it is a VAT group, corporate tax group, then definitely it will be adjusted. The profits of one entity and losses of other entity within the group will get adjusted, as you will be submitting only one corporate tax return. At the same time, there is another concept called carry forward of losses between group entities. So here group entities means if there are related control of more than 75%, then only it becomes a group entity. In those cases, even though they're not eligible to form a corporate tax group because it's less than 95% shareholding, but still they will be having an benefit. If one entity is having a loss, they can transfer it to the other entity, provided this shareholding condition is met and other criteria, so the rules, definitely there would be additional rules to be disclosed also. If those are met, definitely they can carry forward this loss to the other entity and get benefit. And one another important thing is when we consider with VAT for corporate tax, because in VAT we would say that if some transactions are not satisfied with the designated zone concepts for trading, etc., then that particular transaction would change to 5%. That's how we say, and not the entire transactions would change. But for the corporate tax, when a UA free zone entity is not following or not satisfying the conditions of the free zone regulation, as well as conducting businesses in the mainland, then their eligibility of the 0% relief would be lost, and they may have to consider similar to a mainland entity and will be subject to 9% corporate tax rate similar with a mainland entity. And at that time, definitely, as I mentioned in the beginning, that 375,000 threshold or this slab, corporate tax slab, will be effective. So first 0 to 375,000 book profit will be 0%, and above that will be subject to 9%. So that's one important area to be considered. And as I already mentioned regarding the designated zone to the mainland transactions, so if the import of the goods, so basically a free zone entity is conducting business to the mainland entity, where the free zone entity is within a designated zone and the goods are moved from designated zone to mainland under the reverse charge mechanism provision in VAT law, then this entity will, the free zone entity will can still maintain or still continue or obtain the relief of 0% corporate tax rate, and it will become accounted for the mainland entity under reverse charge mechanism. That is one another. I think practically that would be a very important provision, because most of the free zone entities who are in designated zone, when dealing with the mainland entities, are doing the transaction under reverse charge mechanism. And definitely we may have to look about some other provisions like, DD shipments, or like executing or installation services, etc., provided into mainland. All those different transactions may come, but generally to say that this provision will help most of the entities when they're trading with the goods. And to add, the document as of now released is little silent about how the treatment of services would be, which we may have to wait for, because as you are aware, VAT law also had a different treatment specifically for services and goods. So here, how the income of services would be when they're doing in the mainland and obtaining, etc., we may have to wait and see. That's one important area. And as I mentioned about branch of mainland, branch of a free zone entity in mainland will be subject to 9% corporate tax for the branch income if it is generating, and for the free zone entity, it will be still continuing with the free zone relief. So these are the major points related to free zone. And since most of you are our regular attendees, or who are regularly visiting our website, we have, as you might have already noticed, that we have also released a free zone. We have released a corporate tax booklet. So a handbook on corporate tax. More details are available in the screen. You can look into it. You can scan and download this. This is our whole interpretations. We had gone through the full document and prepared in the best way so that the users can get benefit about it, understand the rules which is already out, and also our opinion and suggestions, or like our interpretations, are also highlighted as comments. So just for thoughts when you are looking into, please go through the corporate tax handbook version 2, which is the second version. First version was already released previously. This is our latest version. So you please go through and see if you, I'm sure it will help you. And if you have any queries on that also, please feel to contact us back. And with this, I think definitely when we say about corporate tax and specifically about free zone, there are much more to speak about, but at the time I'm limiting myself because there are more rules and provisions which we are waiting, and definitely the law is yet to come. So I'm not taking additional time to discuss about the other points. Maybe we'll be stop now and we'll catch up in another session where we will discuss in detail about all the provisions. So till that, bye from my side, and definitely we'll see about if there is any questions in our platforms, we'll address that. So if you have any queries, please feel free to ask in our chat boxes, which we will look into and we will address now. Definitely regarding scanning this one, scanning the score code, if you are not if you are already using in mobile, then it might be a little difficult, but definitely our Surivi will definitely guide you regarding to that, how you can, or definitely you will be able to get this link from our website also. And in addition, in our comment also, we will put the link to download this. So I hope any of the means will definitely help you to get the document. Yeah, so I don't think much comments are there as of now in the chat boxes. Only thing is whether there is a loophole between corporate tax for the companies having mainland branch, etc. I don't consider anything as a loophole because it is very important to keep the status of the free zones where it is intended to be tax-free for certain purposes. At the same time, there will be some restrictions for the transactions with the mainland, since it should not give an additional advantage just for one entities. So there are various aspects to look into at the same time to comply with the provisions. So I won't say it's a, it may not be a loophole, but definitely if your transactions are structured, maybe you may fall or get the benefit of 0%, which definitely is an advantage for you. I think with this, I will hand over the mic to our colleague.
Yes, Ajil, thank you so much for that, for enlightening our viewers. And thank you very much, viewers, for joining us in our various social platforms. We are very much thankful, elated, and grateful for your presence, for your virtual presence. And if there's anything that you wish to ask, you may please put it in, pen it down in the comment section. And if not now, we are always there to support you later as well. Available, and yes, regarding our corporate hand tax book, apart from this QR code, it is there in our website, which is www.emiratesca.com, EMIRATESCA.com, and you have to go to resources. Inside the resources, not only this, you'll be finding a lot of other updates, a tax update handbook also over there. So you may glance. Okay, there's one comment from Mr. Nusrat Abbas. What about tax group of sole establishment entities? Ajil, can you please take that question?
Yeah, sure. So if there is a question, okay, regarding the tax group. So if it is tax group here, because we have to see about certain concepts. So if it is tax group and transactions within the tax group, if you're talking about, will not be having impact on your business income. Probably that would be netted off, but you may have to think about a consolidated income for all the group entities. And on the consolidated income, you have to compute the corporate taxable income, and then corporate tax has to be calculated based on that. So it would be for a whole group together you will be looking into. So if there is an intercompany transactions, most of the time it would get netted off each other. But other provisions we have to see, definitely there can be transfer pricing related provisions like arm's length concept, all those things which we may have to look into. But effectively, it would be considered as a consolidated income.
Okay.
Yeah.
Yeah. So that's taken. Thank you very much, viewers. I would also like to inform you that we also have our upcoming webinar on ESR this coming Wednesday. It's free to join. That details also you can go to our website and find it in the webinar section. And yes, Emirates Chartered Accountants Group always believes that knowledge is empowering, and we should be imparting this to everybody around. So yes, we come up with the ECAG live talk sessions quite often, and to tune in for the schedule, you may please follow us in our social handles if you have not. And yes, with that, I would like to close this session for today. I think, Ajul, we can close it.
Yes, sure. Thank you very much.
Okay. Thank you. Thank you, everybody. Thank you for joining. See you in our next ECAG Live Talks. Thank you. Wish you all a very, very good evening and happy Friday.